When it comes to insurance, homeowners are facing a perfect storm: rising premiums, shrinking coverage, and insurers pulling out of the market. Today, we're sitting down with an expert to unpack what's really going on and how you can better protect one of the largest investments you're going to make in your lifetime. And we're going to get started right now. Welcome, everybody. You like that? Yeah. No pressure. You're the expert. I'm pleased to be joined by Val Howard from Farmers Insurance. How are you, Val?
Fine, thank you.
So thankful for joining us. This is an area that is a big concern for our industry as well. The most typical use case where we run into insurance problems is, oh yeah, I went on and I got a quote. It's $300 a month. And we get down the road in the loan and suddenly it's not $300 a month. It's like $800 a month. And that pushes their DTI out of range, and suddenly the loan's in jeopardy. So really why I'm so appreciative to have some time with you is to just talk about, one, what's going on in the market. Two, how can we help our customers? We have a lot of mutual customers, right? People are buying homes using my money and coming to you for insurance. How do we help them better understand what's going on and how to be better prepared? And most of all, convince them to get started sooner. Like, don't leave this task item to the last thing you do. Like, it's not just a checkbox anymore. Yep, have insurance. I've met the bank's requirement. We're off to the races. So that's the point today. So I'm grateful for you to cut out some time and chat with me today. So why don't we start with, how you would describe the current state of the market, especially here in California?
Well, I think we've really avoided a crisis, but it is certainly difficult.
Yep.
And depending on the home and the age of the home and where it's located, it can be very difficult, or it could be not too lengthy a process. But you never really know until you get into it. Oftentimes people will look at a home and they'll fall in love with it, and they're just sure that it's easily insurable. And it's not until we get a little bit further down the road that we realize there are prior losses or other things that come into play. But I think
Yep.
overall the insurance market has, a limited number of carriers right now that are available. And so to make sure that you get someone's attention and that you're focused on it early really makes a big difference.
Yeah, and then the big question is affordability when it comes to insurance. I mean, are affordable policies still out there, or is it like, hey, this is the new normal? We're going to have to assume this cost is going to stay consistent or go up for the future?
Yeah, that's sort of a subjective range. I
Yeah.
think if people look at pricing or premiums in other states, they'll realize that California has been artificially low for a number of years. Regulation has held down the pricing. And so what that's meant is in the past couple of years, prices seem to have jumped up quite dramatically. I believe that it is for most homeowners that are buying a home that is 3,000 or 4,000 square feet or less, it is very affordable. When you get into the really, really high value home market, it does climb more steeply. But I think there are a number of options for most of us that are quite affordable. And there are certainly policies that give you some choice as to how robust you want it or how skinny down a policy you might want. But I think people are more fearful about the costs.
Yeah.
But that isn't what I see. A number of homes are really pretty reasonably priced. But if you compare it to 5 years ago, maybe not.
Yeah. Well, same goes for eggs.
Yeah.
Right? Everything's going up. And yeah, I was surprised. I saw a demographic yesterday. I don't know where. It might have been USA Today. I don't know how old it was, but even with everything going on fire-wise here in California, we're still one of the lower states when it comes to insurance. So a lot of the noise that we hear is like, oh, California, it's so crazy. I mean, I think Texas was double like the average cost. Like there is this, I think you hit the nail on the head. Like, we're used to a certain way, and regulation has kept it down. But that's also forced carriers to leave, right? The
Exactly.
restrictions on raising rates. It's like, I'm not allowed to raise rates. I'm not writing bad
So,
policies. I'm leaving,
right.
and
They'd
that's
rather
kind of
leave the
created the
market.
situation. Yeah,
And
it's going to leave the
that makes it
market.
a lot worse, I think, because you'd have
Yeah,
fewer providers there. And for most people, they actually do spend more probably on auto insurance than they do on home
Yeah.
insurance.
Yeah.
And
Yeah.
so a little bit of it is just getting used to it, and making sure that the that you're maximizing all of the discounts that are available. So sometimes, yes, if you just want to come in and buy a single home policy in a high fire risk area, it could be expensive for you. But a lot of times, people are able to bundle and bring in other discounts that
Yeah.
sort of manage those premiums.
Yeah. And so what are when you talk to a new homeowner, what are some of the common misconceptions that they're coming in with when it comes to homeowner insurance? Like what is when we talk to first time home buyers, they think and TV advertising has created this model where it's like, oh, Geico, Progressive, I just put in some information, I get a policy, spit out, I'm good to go. Like, how do we better educate people? Like, no, you really need to understand the area of risk depending on where your house is. What are some other misconceptions that people come to you with and you're like, hey, wait, no, we got to reset here?
They sort of think that all homes are, once they give me the address, that's the only thing that's coming into play with regard to the premium. That it might not have as much to do with the age of the home, or the condition of the home, or the prior
Hmm.
losses of the home, or they themselves and whether they have filed prior claims. Um, so I find some people are really, really nervous about the process. Others are very, very cavalier. But one of the things I don't see a lot of is is most buyers don't have a lot of knowledge about the home, a lot of historical knowledge, and they
Yeah.
don't know where the fire hydrants are. They don't know the age of the roof. They don't know the kind of electrical that's in the home. They don't know if they have copper plumbing.
Yeah. Yeah.
And
Yeah.
the more they know about the home, the easier it is to advise them on where the proper placement is and what they might want to consider or concern themselves about. So if they come armed with just a little bit of information about the home, that makes it go a lot easier.
Yeah, it's interesting here in California. I've owned homes in the Carolinas, and in buying this home, it was ultra competitive market. It was quote as is, so you don't go through that inspection process with your inspector. I mean, it
Right.
has had an inspection, but it's as is. You're buying the house as is, and so you're not exposed to that. I remember buying homes in the Carolinas, and the inspector would sit down with me and go like, "You're sitting on a crawl space. Like this is where the flood like walking through it. That is avoided here because it's like, hey, the house is as is. You want in this competitive market, there's the house. You want it, yes or no? So
Mhm.
I can totally see how people would come in cavalier and saying, well, a house is a house. Why can't I get insurance?
Right.
Um, I think one thing we're probably aligned on is like the point at which people should start the insurance buying process. So it sounds like as soon as they know the address, they should probably start reaching out to you and getting
Yeah.
their head around what do I need to think about. And it isn't just homeowner, it isn't just fire, it's earthquake, it's flood, it's everything. Uh, y- you know, is that the best time to start? Should they be proactive and get involved even sooner?
So I think that once you have a firm address, that's the time that you want to start to look at insurance. Because
Okay.
that's when an agent is going to put the data into the system and learn a little about the home. It may be that your real estate agent has and the sellers have disclosed everything, but sometimes there'll be something that shows up in a clue report that will have to get cleared through underwriting before we can ever write the policy. And so knowing in advance that that address is clear and knowing if there's anything that pulls in on the buyer themselves.
Okay.
Sometimes there's erroneous information on a prior home that they owned or on landlord properties that they might own. So if we start early, we can just make sure there's nothing sort of in the way, even if the quote sort of sits out there for 30 or 45 days before it's actually issued.
Got it. And then kind of the back to the cavalier thing, the approach of I just need to get in a policy. How do you work with customers to do a true risk assessment? And this probably isn't just home buyers. It's probably people that, I mean, I've been dropped twice here. I'm in Lafayette, been dropped twice. How does your process work to do that risk analysis and not just saying, here's a policy that covers you for what you need. The bank should be satisfied. Good luck.
Yeah,
Like,
there
how
might
do
be
you
some
handle
people
the risk analysis?
that are very, very, very rushed. I just need a basic policy. Just give me something
Yeah,
that's a
just
basic
cover me.
policy. And what they don't realize is that the more information we have, the better fit we we have and the
Yeah.
better pricing. If we don't know anything, if you don't know anything about the home, the pricing is always higher than if we have a lot of details about the home.
Yep. Yep.
So I try to encourage people that you really don't know what might happen. And we're always better to be as accurate as possible on all of the details. And then at the end, they can decide, do they want a bigger deductible or a smaller deductible, or do they want to risk with some kind of actual cash value on the interior? But they need to think comprehensively. And it isn't a matter of it taking an onerous amount of time, but to rush the process will usually end up costing them more, which is the exact opposite of what they think. They think if it's kind of fast and furious and that
Yeah.
it'll somehow be
Yeah.
cheaper
Just
when it isn't. Yeah.
give me the
It's
cheapest
like
rate
buying
for.
like a life insurance policy. If they know
Yeah.
nothing about you, the price is always more than if they know
Yeah.
a lot.
Yeah. Yeah, exactly. And then one of the questions that we are asked that I do not have a simple way to answer is, what is the FAIR plan? So how does that work? So the term admitted carriers, does that mean, I assume it means there's a pool of carriers that are taking on the risk? Is that a correct way to look at it?
So the admitted carrier market are most of the brands that we've heard of and many brands that we haven't heard of. So those
Okay.
are the group of carriers that go to the California Department of Insurance, and they say we want to adjust our rate or we want to make a rule change. And the Department of Insurance has to either say yes or no or adjust it in some way. So
Okay.
they ask in advance. Historically, they've not been getting the rate they wanted, which is why we're in the, kind of working through this crisis right now.
Yeah.
So the admitted market is where you go first. If I run a quote with farmers and it shows certain fire line or protection class scores, it will tell me whether farmers will take it as a solo policy or whether I need to also have the client purchase a California Fair Plan, which I sell as well. But in
Okay.
some cases, they'll take a single policy. In other cases, based on the location of the property, they want a dual policy. And so the California Fair Plan is was designed, and everybody that sells home insurance in California sort of funds this. And
Okay.
it's designed to take on risks that the admitted market doesn't want to take on, in part because they
Got it.
can't get the rate that they feel that they need. It isn't as fearful as people think, in my
Yeah.
opinion. It really allows people to get good, solid coverage and to not worry about to feel that they have as good a policy as they would with a single carrier. It's a little clunky. The quoting process requires photos. And so it's a little more detailed that way. But once the
Yep.
policies are in place, it does a pretty good job. And it covers certain risks or perils that the other policy doesn't. So farmers will cover certain perils and the Fair Plan will cover certain perils. I don't think
Got it.
anyone would choose it because it is the carrier of last resort. So if you can get a single policy, that would always
Yep.
be preferred. But if not, you can snap these two pieces together and they come pretty completely whole at the end of it. The non-admitted market is totally different.
Yeah, I think it's the best way to say it. I think when I'm talking to people and they say I'm being pushed to the FAIR Plan,
Mm.
it's almost like there's a sense that it's an inferior product. It does sound like there's a lot. I've been quoted a FAIR Plan, and yeah, there's multiple pieces, but it's the same thing. It's the same quote. It's the same, like it's outlined the same. It's not really inferior coverage. It's just the mechanism by which we're able to deliver insurance in this market,
Yes.
right?
Yeah. That's the truth of it.
My question is more around like what is there protection that those carriers that are part of FAIR Plan can't leave the state, or do they have the same liberties to say,
They
you know what, we're done with California?
they can, and I think some carriers have exited because they don't want to take on more risk. So if you continue to sell home policies in California, then you have to
Yep.
be a part of the California Fair Plan and pay out. But some people want to mitigate their risk, and so if they stop selling in California, it makes their percentage overall go down. So they might
Got it.
conceivably have less exposure. So if a state
Got
farm
it.
is no longer selling home policies, they're not going to continue to increase that exposure with the California Fair Plan. It would sort of decrease ever so slightly.
Got it. All right. So the takeaways here are: get started early. You identify the property, you identify the property address, get started early, Make sure you're talking with somebody that's actually going to do a risk assessment for you. That isn't just, yeah, here's a policy that covers you for the purposes of getting the mortgage. Good luck. And then, be knowledgeable about your property. Don't try and dig in and understand. And I actually might come to you for kind of a list of things that we can put out to say, these are the things, if you're going into a discussion with an insurance agent, you should know about your property. Like, what is the
Right.
exterior? Is it brick? Is it hardy backer? Is it vinyl? What is it? And even if there's a list of 15, to say, if you can get if this level of knowledge on your property, you're going to be a step ahead going in and sitting down with Val and going over the property, because she's not just blanketly looking at blanket coverage for 123 Main Street. It's actually specific based on what the house is made of and obviously
Exactly.
where it resides. Anything else that you think California homeowners should be aware of? Anything that that's coming that they need to be aware of? I think the big fear is getting dropped. I think it's going to happen to people. I think if you're in an
Mhm.
area of high risk, you're probably going to experience that. It's not the end of the world. You get plenty of notice. The FAIR Plan is there for you. Is there anything else you think that
Yeah,
California homeowners should be aware of?
I mostly recognize that you can almost always find coverage. It just may
Yeah,
take you a little bit of time, a little bit of shopping. It's not as though carriers are not willing to take on the risk. It just may be a little bit harder to find, particularly if you have a home that's really large or has multiple prior claims. Those are probably the thorniest of the issues. But understanding and being honest with your agent, kind of understanding what you're up against, makes it a lot easier and streamlined. If I know I'm coming up against a situation where there's not a lot known about the house and it's old and it may be in poor condition, I can steer a client to the proper um, carriers that
yep,
are not fearful of that risk. And it may not be that a branded farmers type product is the right situation. In those cases, I would steer them in other direction. So it just makes the process go a lot smoother in
got
the
it,
end.
got it. Very, very helpful. I think this is something we're going to continue the discussion about, because it is an evolving process. California and I assume other states like Texas, it's an evolving process there as well. But I think this has been very, very helpful information. I think it's going to help us direct homeowners to a resource to say, here's what you need to be prepared for walking in the door.
Right.
Don't take this lightly. Understand your property. Make sure your coverage is what will allow you to sleep at night. It's probably my biggest concern, is like, do I have enough if Palisades happens?
Right.
So Val, thank you so much for taking the time and just answering my questions. I think it's going to be very helpful. People will respond well to this, and yeah, I might reach out to you and see if we can't get some content to put a blog post together of just how to help, just a checklist of things that people can prepare for before they have a conversation with you.
Okay. Sounds good. Thanks.
I will put Val's information in the show notes, so you can reach out to her directly. If you're in California and you need a quote, I highly recommend you reach out. And we will continue to produce episodes like this just to better help home buyers and homeowners how to protect themselves in a pretty crazy market. So thanks everybody for joining us. Thanks again, Val. Have a great weekend, everybody, and have a safe 4th. Bye-bye.